get into some market neutral option trading strategies. Okay. Let's get into some market neutral option trading strategies where we will discuss about the possibilities of executing a situation. Okay, executing option trades in a situation. So based on all the strategies, how can we delve into the option world is also something which we will discuss tomorrow. Okay, so based on the strategies, right, we will go ahead and we will discuss about that as well. Now those will be directional ones based on the current situation, how to execute a trade, what kind of strikes to select, etc. Everything we will discuss tomorrow. Now market neutral option trading strategy, इसका मतलब क्या है कि जब भी मार्केट में कोई डायरेक्शन नहीं है, ओके, जब भी मार्केट में कोई डायरेक्शन नहीं है, तभी वी नीड टू हैव सम क्लैरिटी, एंड दैट क्लैरिटी when it is not established, we will not go into a directional one, we'll go into a market neutral one. So in that, one strategy called as long straddle is something which many people execute. So when you are going to do a long straddle, you are having that you are expecting some big move to occur. Okay, you are expecting that yes, कोई move हो सकता है, but you are not knowing the direction. So what you will do is you will build a strategy here where you will be taking two option contract. You will be buying a put, and at the same time you will also buy a call. You'll buy a put and you'll buy a call. Why? Because you feel that yes, market can go in any direction. So you will decide to do it this way. So now when you go and do such an activity, for example, if you see here, you are buying a 5,000 call and you are buying a 5,000 put. So in this scenario, you can see here that there will be a premium outflow from your end. Why? Because you are buying a call and you are buying a put. And what you will do is you will create a range. In this market neutral strategy, you will be creating a range and then you will be acting on it. So here what you are doing is you are buying the same strike, call and put, because you are expecting कि कौन से साइड पे भी मार्केट जा सकता है. Okay, कौन से साइड पे भी मार्केट जा सकता है. At present, it is not very sure. So in this scenario, your break-even point, you are protected on the downside till 4714, on the upside till 5286. This levels are achieved by adding the premium amount. By adding the premium amount, subtracting it from 5,000 and adding it to 5,000. So you will get this payoff diagram. So if the market continues to be here, okay, and then you will be able to, your profit will be unlimited. So as it starts, if it starts going below this or if it starts going below this, you will have a problem. Now, this is a scenario of long straddle. Now, if you don't want to do a long straddle and you feel that there is not much of move expected, then what you will do is you will sell a put and sell a call of the same strike. In the sense that you will ensure that you are able to contain. So when you are selling an option, what happens? You are receiving the premium. So you are selling a put and selling a call at the same strike. Why? You know that by the end of the expiry, you know that more or less the range, the overall price action will be in that range. So first you'll have to understand that yes, there is not much of move going to happen. So if I am able to take this particular strike, the overall expiry will happen in and around this area. So what you will do is overall movement jo hai aapka, it will be somewhat like this. Like if you see here, this is the strike and you will receive this premium. You see here, this is the premium which you will receive. And essentially what you're doing is you are locking in your profits. The top side is your profit. So आपका profit lock हो गया है. In a long straddle, आपका outflow was locked and you're open to unlimited profit. Here, your profit is locked and your loss is exposed. Okay. Now, when you're going to take this particular straddle, you'll have to understand that your anticipation of the market movement should be reasonably clear that yes, ये महीने में ज्यादा छुट्टी है, ये महीने में ज्यादा एक्टिविटी नहीं होने वाला है. So ऐसे सिनेरियो में you can go ahead with a short straddle. Now the other type of movement, okay, the other type of movement which you see in the market is a long strangle. Many people like to do this. They buy a put and then they buy a call at a higher strike. Now this is directionally neutral. Yani the when you are participating in this, you are not expecting much of market movement. Okay, ज़्यादा आप major movement expect नहीं कर रहे हो, but at the same time you are trying to play. What are you trying to play? You're trying to play for in case there is some bit of movement, you will be able to take advantage, right? Now, in this particular scenario, okay, this happens when the market is more or less static. So whatever strategies we are discussing today, yesterday was a directional based approach. Today is an approach where we are expecting that the market will remain contained. It will not move much. So that is why you are taking an advantage of this. So when you're going to go for a long strangle, what you do is you identify a particular range. If you see here, we are identifying a particular range and we are saying that as long as the market remains in this range, there is absolutely no problem. You can see here that as long as the market remains in this range, there is absolutely no problem. If it starts going up, then you can see here that this is your break-even point. If it goes above 5287 or if it goes below 5703, you will be able to, your loss is contained at 197. Why? Because that is the premium you have paid. Now, your profit potential enhances as it starts going up. If it goes to if it goes on the downside or if it goes on the upside. So if it goes below above 5287 or if it goes below 5703, you will be able to take advantage of this move. And what have you done? You have logged in your outflow. In the same way, now a short strangle. A short strangle is on the other side, where you are selling a put and you are selling a call at a higher strike. And here you are not expecting any much move here, but compared to a straddle, in a strangle, you are creating a range. A straddle is at one particular strike. A strangle is where you are creating a range. And as long as that range is not disturbed, there is absolutely no problem. Now, once you sell a strangle, you will receive the premium. And here again, you are locking your entire profit based on the range. So as long as it is in this range, you can see here 4900 put, you are buying a 4900 put, you are selling a 4900 put and you are selling a 5100 call. तो यानी आप ये जो इसका overall range जो है, the difference, the total addition of the premium you are subtracting from 4900 and you're creating 4703 and 5297. So this is your break-even point. So if the market is within this range, you will not have a problem and you will continue to enjoy the premium received. But if the market goes beyond that, only then you will face a problem. All right. So now when you take a look at this, right, when you take a look at this, what does it indicate? It indicates that there are challenges for everyone. Now, certain people want to do this kind of strategies, but then when you want to short options, the margins are much higher. So my advice to everyone will be that whenever you're going to engage into a short selling option, you have to ensure that you have the requisite margin. If you do not have the requisite margin, you will always have challenges. Now, if I have to summarize these strategies, okay, these are some strategies which I spoke about, where we are focusing on how to take care of the neutral situation in the market. Normally, people buy a call or sell a put. But you got to understand that when the volatility increases, okay, when the volatility increases, you have to be very careful. It's okay to buy when the volatility is low. That is why when the volatility is high, people tend to sell options. Now, when you're going to sell the options, naked options, which is also called as blanket options, if you're going to sell that, you have to be ready and you should have a cutoff point. If you have a cutoff point when you are selling your options, that is the best way. Now, when you are having an idea, okay, that yes, there is a possibility of some big move to occur, but currently the market is negotiating the sentiment, then you can go in for a straddle. Now, when you know that it is expected to stay range bound, you can go for a short straddle. Straddle is where the strike price is the same. Now, when you build a range and then you participate, that is when you get into a strangle. All right. When you build a range, for building a range, you have to identify the ideal support supply zone and demand zone, and then you'll be able to build a range. You can do it on indices. Largely, people do it on indices, but you can do it on stocks as well. So you should have an idea about the time, and you should also have an idea about the direction. Because risk is something which is to be noted in every option trade, but in this scenario, you should always be aware about the time. At the start of the month, generally option takes some times to build, but then these are some strategies which are very useful, which are executed towards the second half of your expiry. All right.